your payment is going to be $580 less a month. Like, that is significant.
Buyers and sellers, I am talking to both of you today. We are going to get into ways to both reduce your monthly payment, buyers and sellers, ways to make your listing stand out. Here we go. Hey everyone, I'm Heather Taylor, founder of Tailored Realty Group, and I'm here with my friend Christina Jasper, founder of Jasper Mortgage Group. And today we're going to walk you through exactly how a rate buy down can benefit both buyers and sellers. Now, for the sake of this discussion, we're going to assume a $500,000 purchase price with 5% down, and we're going to talk about $10,000 that we have to use at our discretion. Keep in mind, we're also going to be using ballpark interest rates, so don't focus on the exact numbers. Instead, try to understand the concepts. Okay, here's how we're going to break it down. First, we're going to start real simple. What is a buy down and how does it work and why does that matter to you?
And then we're going to look beyond the buy down because some buyers might decide that they would rather use the funds in other ways. So we'll compare the options side by side and really base it on your personality type and your financial goals.
And then finally, we're going to get deeper into the numbers and show you the impact of these various choices 10 years down the road.
By the end, you'll understand exactly how a buy down works and why this strategy can be such a powerful tool, whether you're buying or selling.
All right. So first of all, Christina, explain to all of us what a rate buy down is, how it works, the benefits.
Absolutely. Yeah. So there's two kinds of buy downs. There is a temporary buy down, which is where you temporarily buy down your interest rate. Typically, it's for the first 2 years. So you get 2% lower the first year, 1% lower the second year, and then the interest rates of today from the third year on. So that's the temporary buy down.
Okay.
A permanent buy down is when you pay money to permanently buy down your interest rate for the life of the loan over 30 years.
Okay. So in a temporary buy down, I know a lot of people talk about a 2-1 buy down. What does that actually mean?
That was that 2% the first year, 1% the second year. So let's just say rates are 6% today. The first year, you're going to get a 4% interest rate. Like that. That's pretty gorgeous. Second year is 5% and 6% from the third year forward.
Okay. And when you say 6%, just to reiterate, we're talking about, if that's the current going rate.
Yes.
So 2% lower first year. So that makes a big impact on your monthly payment.
From the get-go.
Okay. So, and that costs about $10,000?
Depending on the purchase price of the house.
Okay.
So it's let's say you're buying a $700,000 home, that temporary buy down is going to be more expensive if you do it. But also, please keep in mind, temporary buy downs can only be paid for by the seller. You cannot pay for it if you're a buyer, but the seller can contribute to that temporary buy down.
Okay. So help me just circle back on this. Is $10,000 the right amount in a $500,000 loan to do a 2-1 buy down?
It is. Technically, it's $10,600 if you look at the actual numbers. But yes, around $10,000 for a $500,000 home if you're putting 5% down.
Okay. So I might say, seller, you know what, rather than dropping the price 10 grand, let's do a 2-1 buy down. And can you tell me what the difference in interest rate payments would be? Or in total payments, I guess?
So if you did a temporary buy down on a $500,000 home and you're doing 5% down, your first year, your payment is going to be $580 less a month. Like, that is significant. Holy Lord. Like, that is super exciting, right? And you want to kind of jump on that, but then you have to remember that that's only for the first year.
Okay.
So though we're excited, you have to be comfortable with the payment in the final year, at year 3. Because if you banked on it and you were uncomfortable with the payment at 6%, by that third year, this is the wrong decision for you because I cannot guarantee you're going to have a refinance opportunity in that first 2 years.
Okay. And we're going to get a little more into the weeds in section 2 about the differences between maybe you should take that 10 grand and do something else. But it's definitely something to keep in mind, whether you're a buyer or a seller. For example, if you're selling the house, you might want to say, hey, we're offering a rate buy down rather than a price reduction. Either way, so say I get I do a 2-1 rate buy down. Tell me the logistics of how that works. Like, what if I find out in a year I have to move and now I've used that money for rate buy down, now I'm leaving it on the table, or what happens?
Yeah. Beautiful thing about temporary buy down is that is your money as the buyer. It's sitting in a piggy bank at your loan servicer. Loan servicer is who you pay your mortgage to. So it's sitting in a piggy bank and it's helping you pay your mortgage every month. Let's say 6 months from now, there's a great refinance opportunity and you decide that I want to get that lower interest rate and you've only used, I don't know, 7,000 of the 10,000. It's not going to be that much, but let's just say that happened. That extra $3,000 that's sitting in the piggy bank will go towards paying down your mortgage when you go to refinance. Or if you go to sell, that goes towards a reduction of the mortgage so that you get more net proceeds or more money at the closing table when you sell.
Okay, so no matter what, if I do this use this $10,000 towards a rate buy down, I'm not going to lose any percentage of the $10,000 whether I refinance or sell that.
No, that's your money. That's being depleted every month as you make your mortgage payment until there's nothing left in the piggy bank. And then you go to the payment of today.
Okay. So versus I take the $10,000 off the price of the house and my mortgage payment only changes how much? Do you have that number handy?
Every $10,000, no matter what your purchase price is, every $10,000 that you take off a purchase price, it usually comes to about $60 a month savings in a mortgage payment.
So I'm looking at saving, reducing the price 10 grand and saving $60 a month, or doing a 2-1 buy down. And for that first year saving $500 and something a month, and a second year saving, I don't know, what'd you say, $200 or $300 a month?
Yes.
Okay. So that's something to definitely think about when you're thinking about, do I want to take 10 grand off the price or do I want to use it a more creative way? All right. So now that we understand the temp buy down, let's talk a little bit about how a permanent buy down works, which is pretty different.
It is very different. So permanent buy down is when you permanently buy down the interest rate for the life of the loan for the full 30 years. And what people don't understand is that rates are a choose your own adventure. You don't have to take the free rate of today. You can buy a lower rate or the seller can buy a lower rate for you. So the way we buy down interest rate is we pay something called points as part of closing costs. 1 point is 1% of a loan amount. So if you want to buy a point, you pay 1% of a loan amount.
Okay.
In this scenario, we're $500,000 purchase price, 5% down. So a point's going to cost you around $4,700. And 1 point will buy you down by 0.25% in interest rate. Okay. Every point you pay, you get about 0.25% in interest rate. So if you're getting $10,000 from the seller, you get 2 points, which means you get your interest rate down by 0.5% permanently.
Forever.
And remember, like we were talking about $10,000 towards off the purchase price saves you $60 a month. $10,000 towards points saves you $160 a month for the life of the loan.
So that's pretty freaking nice.
That's really nice. That's really nice. And it's a great decision if you plan on holding this house for at least 4.5 years or more.
That's kind of your break-even point on the points that you've paid versus. But if you got $10,000 to use from the seller anyway, this might be a nice way to save yourself some money every month for the life of the loan.
Absolutely.
Out of curiosity, and we might have to look and take a pause and look, but how much will you have saved in interest payments after 10 years?
So after 10 years, about $25,000 in interest over 10 years.
So in 10 years, you've saved $25,000 in interest. Okay. All right. Well, that's really cool to know. Okay.
Not bad.
So we reviewed temporary buy down and permanent buy down, a quick high level overview on those. My understanding, correct me if I'm wrong. Sorry to touch my mic. My understanding, correct me if I'm wrong, is in a temp buy down, the loan that you're getting is at a higher rate, but the seller is putting some money in a little piggy bank to pay the loan, to pay part of your loan payment, which will make it feel like you're down 2 percentage points the first year and 1 percentage point the second year.
That's right.
A permanent buy down is for the life of the loan, and it's actually a different loan interest amount.
Yes.
Okay. And it's bought down using points. All right. Awesome. Hopefully that makes some sense to everybody. And you're kind of seeing now where we're going with this. There's a lot of different ways to use $10,000, and they're going to benefit you differently depending on what your needs are. So I thought it was, when I was talking to Christina about doing this, she mentioned to me that she's got 4 different options for the $10,000 based on your personality type. So let's go through those a little bit. I got my little cheat sheet here. Let's go over these 4 different ways based on your needs and your personality type that you can use the $10,000.
Yeah. Let's start with the temporary buy down because that's where we started. So temporary buy down, I call them my Las Vegas buyers. These are my buyers who are willing to roll the dice in hopes of getting a refinance in the next 3 years.
Okay.
And so, they're going to take the chance that what if rates stayed at 6% forever? They're fine with that because they never got a refinance opportunity, but they can handle their mortgage payment even at the highest payment over those, like the temporary buy down, right?
Okay, so they're rolling the dice on prices going down, going to take the big benefit right now, first 2 years, and see what happens. Okay,
and then see what happens. Maybe we'll get 5.5% for free in 2 years, so I don't want to pay for it right now. So that's my Las Vegas buyer. Most of my buyers are a little bit more risk averse than that. They sleep better at night knowing their rate is always going to be below, let's just say 6%. They would rather take that lower rate, not take the risk, take the bird in hand right now. And I let them know if rates do go down, let's say they hit 5% next year. Let's say I'm wrong. And this is, rates I believe rates are not going to go down that low, but if they do, then we can still refinance it. We just have to forget we paid 10 grand up front, right? Like, oops,
yeah,
we paid insurance in a way to make sure that our rate was really low and we can still benefit from the lower rates if they do come down. So that's my more risk-averse buyers.
They want the guaranteed lower payment over time.
Mm-hmm.
Got it.
But then I also have buyers who care a heck of a lot about money right now. They want $10,000 cash in hand. Maybe that's because they have a renovation they want to do on the new house.
Or they want to buy that car that you kept telling them they can't buy until after closing.
Yeah. And you want to put $10,000 more towards the car because that helps your debt payments a heck of a lot more than putting $10,000 towards the house. And so we can do other things with that money, and that's putting that money towards closing costs so that you have an instant $10,000 cash in hand. Think of getting your purchase price down, your list price. If you're asking them to come down $10,000, that's delayed gratification. You're getting $10,000 when you sell the home,
right?
$10,000 extra. $10,000 towards closing costs is immediate satisfaction. So if you're a little bit like me, I do not like delayed satisfaction. I like immediate satisfaction.
I want it now.
I might take that $10,000 towards closing costs to keep that money in my pocket because I'm comfortable with the payment where rates are today.
Okay. You could take that $10,000 and invest it. And we'll talk about that in the next part.
Yeah.
And then the fourth option was there a fourth option?
Well, the fourth option was just getting your purchase price down.
Oh yeah. The fourth option was purchase price down, which after all this, I hope you're seeing boring. Other options. Okay. So that gives us our four ways: a permanent buy down, temporary buy down, $10,000 towards closing costs, or taking $10,000 off the price. Yeah. So I hope again that this is kind of getting you to marinate both buyers and sellers. For sellers, how can I make my house look more attractive? Just mentioning other $10,000 to use as you would like, rather than just taking $10,000 off the price, can be more enticing as long as you, my buyer friends, understand your options. Whenever you use a lender like Christina, one of my favorite things about you is that she's going to walk through all of this with you and have these conversations so you really understand them. But let's jump into the third part, which is someone like me. I'm risk averse.
Okay.
And I like to shove my money into investments, right? So that $10,000 towards closing costs, for example.
Yeah.
So for somebody like me, I might say, I'm going to keep that $10,000 and I'm going to invest it because now I don't have the $10,000 out of pocket. Now I'm going to invest it. So if we were to take, 6% over that 10 years, you and I calculated it was about...
We almost doubled it.
Yeah.
It was like your $10,000 turns into about $18,000. Yeah. If you had a 6% return on that money year over year.
So rather than taking that $10,000 price reduction, you've made that $10,000 become $18,000-ish. And you're still getting the equity increase in the house. So you can actually be making more money by putting that money to work elsewhere rather than putting it into the house.
Usually your net worth comes out better investing. Now, fine print. Your net worth does not turn out better if you go buy a boat with that $10,000, right? I have $10,000 in my pocket. Like, don't go have fun with it. If you actually invest it, yes, you will be usually better off.
Caveat, neither of us are investment advisors. This is not investment advice. We're just telling you some options. I'm someone who likes to have low rates and low monthly payments, working at a job like mine where it's very commission-based. I just like to know that my payments are low. But then when I think about it, 10 grand off the price of the house doesn't really change my life that much on a month-to-month basis versus looking at 10 years down the road and having twice as much as I invested it. So I think that covered every point we want to talk about, didn't it?
I think so.
All right, wait, we don't have to talk to you guys for hours to get this stuff across. We just want you to understand the different options. So if you want to talk any further about any of this stuff, please feel free to book a free consultation on my website, or you can reach out to Christina Jasper directly. I'll put her contact information on the screen. If you have any comments that you want to share, feel free to drop them in the comments below. And that's all we got for you today.
Absolutely.
Anything else you want to tell these fine people?
Oh, also, if you're a seller and you really want to make your listing look sexy, I highly recommend putting a big old flyer on your countertop that says first year interest rates as low as 4% on this house.
Ooh.
I would put an offer on that house if I heard that I could get as low as a 4% interest rate. So that's how you really heat up your listings using temporary buy downs in this philosophy.
I love that. That's a great point. Yes. So sellers, you want to make it look great. We can put it on the MLS that way. We can put a little flyer in your listing
with our faces on it.
So. All right, that's all we got for you. We will see you next week, or at least I will. Bye.